Okay, hello and good morning, everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 2nd of September 2019, so welcome everyone. Welcome to this first trading day of September. So I hope you all had a fantastic weekend. You're all feeling nice and relaxed. So as always, before we jump into the charts, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then, let's quickly jump into the, or actually before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, where you can go in and have a look at different analysis that we do on a daily basis. And of course you can also subscribe to our strategic report that is released every Monday. So it's currently getting prepared, so yep, you can always get that one just to have a kind of idea what's happening this week. So yep, feel free to do that, guys, and like I said, feel free to check us out here on our website, because I believe you can find a lot of useful stuff right now. But for now, let's jump into the charts. Now the first one I want to touch on here is the DXY. So the dollar index had a nice run to the upside last week. So I've talked about this one a while ago, and previously basically was what I was saying, that if we get a nice push above the 98.45 zone, then yep, there is a possibility of seeing a test of the 98.93 zone, which was the highest point of August. So that was reached on the 1st of August, and kind of for the whole of the month it was the highest point, but that kind of got broken on Friday, on the 30th of August, and we saw that this one created a new high here near the 99 zone. So basically what we're going to do here right now, and how we're going to look at this, in a way, of course, there is a possibility of this one pushing further up here, but we probably will expect maybe a small correction back to the downside here a little bit, given that it had already a fantastic run here to the upside. So in a way, we're gonna kind of keep an eye on this, and especially we're gonna keep an eye on this 98.45 area, approximately around there. So if we see a slide back down, this area could play out as a nice potential support zone from which it could rebound and push back to the upside. But again, don't get me wrong, I mean, we could see even maybe this one not traveling all the way here towards this 98.45 zone, maybe rebounding from somewhere earlier. And in a way, what you could do here as well is, and let me just quickly put this one on the chart, you could draw a Fibonacci here and basically try to figure out this way where the potential rebound could be, and this is what I was talking about. So it might not even travel all the way towards this 98.45. It could rebound from the 23.6% retracement zone here, which could be around the 98.60 zone. So also good potential level. Keep your eyes on this one, and if it does get a hold up here, we could see this one rebounding and, like I said, pushing higher. So for now, keep this in mind. Initially, keep an eye on this 98.60 zone, approximately around there, but if it travels a little bit lower, then this could be that kind of last resort for the bulls to step in and push this one higher. Again, this is all that I'm talking here is, of course, from the shorter term perspective, because as you can see, overall we're still within an uptrend. We could continue pushing higher, but let's say if we see a drop below the 98.45 zone, then this could in a way lead towards a little bit a bit of a larger correction to the downside. So that's why why keep your eyes on some of these key levels. If for those who are more on the cautious side, if you don't want to kind of try to play this game here, you could in a way wait until we see a clear push above the 98.93 zone again, or even better, the 99 area, because if we get a push above this, then well, this is going to be quite interesting, because if I'll jump into a daily chart very quickly here, this is going to be very interesting, because the path could be open towards the 99.90 area, because previously, as you can see, it acted as a fantastic area of resistance back in May 2017 here. So could be a nice good potential target, and like I said, this could be these could be the levels that could be met, these levels from 2017. But again, like I said, for now what we need to do here is just wait for a confirmation break here. So like I said, for those who are more on the cautious side, you could in a way wait for the 98.93 zone, a break of that, and or even better, the 99 zone. For those who are more adventurous, I mean, you could in a way keep an eye on here on this this potential move lower here, maybe a small correction, and then if it gets a hold up near the, as I showed you previously, the 23.6% Fibonacci retracement around here, 98.60, then this could curve up and push to the upside. But again, like I said, if this starts falling below the 98.46 45 zone, then we could in a way expect maybe a bit of a larger correction here to the downside. So keep your eyes on that one. Jumping into gold very quickly, I'm not going to spend too much time on it, but just kind of wanted to mention. So overall, we're still within an uptrend. It moved higher last week, but it failed to kind of create a new higher high, and you can see that the commodity kind of reached the area near the 1550 zone, and basically kind of slid after that to the downside. So it managed to test an area here near the 1516 zones, 1516 17 approximately around there. It managed to test that area on Friday. So in a way, if this decides to move a little bit lower again, maybe to go for a larger correction here to the downside, keep your eyes on this 1517. If we see a drop below this, this would confirm a small kind of forthcoming lower low here on the shorter time frame, and we could see maybe a test of this initially, of course, of the psychological 1500 level, but slightly below that we do have this 1492 zone, which also could play out nicely. So and to be honest, looking at this chart, by the time, let's say by the time it could travel here lower towards this 1492-93 zone, probably the 200 EMA here on the 4-hour chart could approach this area, and that's why this level could become an interesting one to watch, because if it gets a hold up, we could see maybe this one reversing and pushing back to the upside. But if it starts breaking, then well, might as well test this upside support line taken from the low of the 30th of May. So keep your eyes on that one. In terms of the upside here, well, again, probably it's better to be very careful here and wait for a clear break above the 1550 initially, and then maybe just for that better confirmation, break above the 1555, and only then kind of target higher areas, because this way the commodity would confirm a forthcoming higher high, and it could become a little bit more interesting for the bulls then. Jumping into USDCAD now, very quickly I wanted to mention this one. So it kind of continues to range somewhat, and it's stuck roughly between let me just actually adjust this level right here. So this was a nice area that we were looking at last week, but basically this pair is stuck roughly between the 1.3250 on the downside and the 1.3345 on the upside. So in a way, until we see kind of a nice good clear breakthrough one of these levels, we're gonna remain somewhat neutral. We're gonna keep an eye on this, and let's not forget that we do have some interesting data coming out on Wednesday, if I'm not mistaken. Let me just quickly double check that. So basically on Tuesday, let me just double check this, guys, very quickly. So we have some Canadian figures. There we go. So on yep, on the Wednesday we do have the Bank of Canada coming out with their interest rate decision. I mean, for now it seems that there could be no surprises, but let's of course keep this one up until Wednesday, and let's see how this is going to react, because for now, like I said, we're going to be somewhat neutral on this one. We're just going to continue observing these key support and resistance levels. So basically, if we get a nice push above the 1.3345, this could in a way open the path towards the next possible good area of resistance near the 1.3432-33 zone, marked near the high of the 18th of June. And in terms of the downside here, if we get a drop below the 1.3250, then keep your eyes on this little obstacle here near the 1.3220-21, but if that fails to withhold, then yep, it could slide further down below even the 1.32 zone, possibly testing the 1.3180. So keep your eyes on this one. Jumping into another interesting pair, I looked at this one on Friday, and basically I was kept talking about this kind of little range here that we got working out nicely. So this has been running from around the beginning of August. So the pair is currently stuck roughly between the 0.6529 here on the downside, roughly around there, and on the upside, the 0.6670 level keeps on holding the keeps on holding AUDCHF down. But in a way, we're gonna wait for that clear break. So if this makes a nice good push above the 0.6670, this is where it could become a little bit more exciting for the bulls. We could see this one pushing higher, and initially we will target, let me just quickly adjust this, there we go. So initially we will target the 200 EMA, but probably a better level to watch here could be around this 0.6740. But let's not forget about one thing, because we're still within a downtrend here and trading below this kind of medium-term tentative downside resistance line taken from the high of the 18th of April. So in a way, if we see this one pushing further up here and maybe even breaking the 0.6740, this is what could keep it down, this downside resistance line. So that's why be very careful. Yes, from the shorter term perspective, we could see this one pushing a little bit higher here, especially if it breaks above the 0.6670. But still, like I said, overall kind of we're still within a downtrend, so keep your eyes on down. If it doesn't break the 0.6670, then it decides to reverse back to the downside here. We will wait until we see a clear drop below the 0.661210 zone, approximately around there, and only then we will consider maybe a larger or slightly deeper slide to the downside here. So that's why, guys, for now, be very careful here. Keep your eyes on these two levels. Again, like I said, it's currently closer towards this upper side of the this range. Let's see if it actually breaks that. GBPUSD, something to watch out this week. Of course, we do understand that the British Parliament is coming back from its recess, but as we know that there's a lot of developments and a lot of political issues in Britain, and that's the simplest way of putting it, basically. So for now, what you could do here is just basically monitor some of these key areas of support and resistance, because like I said, for now it's very tricky. The pair could go either way. You can see that last week it did try to push higher, it did try to break this downside resistance line, but failed to do that, got held near it and reversed back to the downside. It broke this upside support line, this short-term kind of maybe a bit of a tentative upside support line, but now we can actually get rid of it. It's no longer valid, and it traveled lower and managed to test this area right here near the 1.213730. Let me just quickly adjust this very quickly, around 37. Yep, so the 1.2137. So this is what we're going to do here, is just going to monitor this level. If we see a drop below this, then there's an increased chance of seeing this one sliding towards the 1.21 zone, or even the 1.2063 area. Don't get me wrong, we could move all the way here towards the lowest point of August here, near the 1.201312 zone, approximately around there. But again, like I said, for now, let's not over speculate on this one, because GBPUSD is the tricky one, and just in general the pound is the tricky one. So that's why, guys, be very careful this week. Keep an eye on the political situation in the British Parliament, or just the situation in the British Parliament. Any kind of news around that, and any negative news around that, could kind of really have its effect on the British pound. So that's why what we could do here is, just like I said, monitor some of these key support and resistance levels. So if we see a drop below this 1.2137, this would confirm a forthcoming lower low here on this shorter time frame, and we could see maybe a test of the 1.2106 or the 1.2063 zone. So like I said, that's why, guys, for now, be very careful. We'll go slowly on this one. For us to get excited with the upside, and as you can see by the arrow drawn here, we need to see a nice, good, clear push, not only above this downside resistance line, but ideally also above this 1.2310 zone. And only then we will target higher levels. Then we will aim for those 124s and 125s. But again, for now, until we see that, it is kind of a bit of a tricky one, even though it is showing some good signs here right now. But let's not forget, this is just the early morning, right, and early European morning, and we could see this one reversing back to the downside, especially if this pivot here, this pivot point, continues to hold the rate down. But even if it travels higher, this is what still could hold it down, this downside resistance line. So also be very careful around there. And the last pair I wanted to quickly touch on, and that's euro dollar. So well, this one is quite interesting. I mean, it took a hit on Friday, and you can see it slid lower. It managed to break some of these levels that I talked about last week, and basically one of the levels was the 1.1023-24 zone. It managed to nicely break that lower, and managed to break the psychological 110 zone, and managed to reach the area near the 1.096160 zone. So from which it kind of reversed back to the upside, and you can see that it's trying to recover somewhat. But again, for now, we're going to remain somewhat bearish on this one, and we're going to keep an eye on this 1.1024. If it holds, if it this time acts as a fantastic area of resistance, then we could see another leg of selling here, and a push to the downside towards the last week's low near the 1.0961 zone, or even actually going further down towards the 1.09 level. If this pushes above the 1.1024, yep, that could be a nice kind of opportunity here for some of the bulls to join in and push this one higher. But ideally, we'll monitor or consider a possible larger correction if we see a push above the 1.1050, and only then kind of aim for slightly higher levels. But then again, like I said, you can see that we are still below this tentative downside resistance line here, taken from the high of the 25th of June. So that's why this could have a nice hold up here. So guys, for now, keep your eyes on these two levels. Let's see how this is going to play out. For now, like I said, on the euro dollar, we are more bearish than bullish. But again, we could see a small correction here, but be very careful near the 1.1023-24 zone. Okay guys, I really hope you found it useful. Thank you very much for sticking around and watching it till the end. If you want to join me later on at my trader's tea time, as always, that's 13:15 GMT. For now, I hope you have a wonderful trading day, and I'll see you later. Bye bye.